Boom. Good morning, everybody. Happy Wednesday. Today's Wednesday, right? Yeah, Wednesday. I don't even know what day it is. Welcome to Pre-Market Prep. Spencer Israel, Dennis Dick with you today. It is quiet out there. It is quiet. We're coming to, Christmas Eve. It's people are out of town, but that's not to say there aren't things to discuss. We got Tesla on the radar. We got Alibaba on the radar. We got the unwinding a little bit of the safety trade yesterday. We're going to talk about that. We'll have Chris Temple on the show today. He's editor of the National Investor. He'll be on at 8:35. So we got a lot to get to. We will take questions from our chat. As always, let's roll that intro.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
All right, let's bring on Triple D. Dennis, good morning, man.
What's up? Talk to me.
Talk to you. I'm talking to you right now.
What's going on?
Let's bring up, what's up, everyone in chat? How we doing? Martin, Zippity, Raul, Nature Franz, Howard, Pat, Bill, everyone. I can't name you all. There's too many, but good morning, everybody. Hope you all are having a good start to your day. Before I proceed with the markets and the chat and all that good stuff, I want to make another call to action. I said this yesterday, and I'm going to say it again today. We are doing an end of year 2022 Benzinga YouTube survey, improvement survey. We're taking feedback from our audience. What do you want to see from this show or any show next year? How can we get better? I'm putting the link to that survey in the chat right now. It is obviously free. We're not getting any of your information whatsoever. But take it, give us your feedback. We take it very, very seriously. Please and thank you. That being said, let's bring up the charts here. I've got the SPY open, Dennis, because Joel ain't here. So
sure.
when Joel's gone, we only look at SPY.
We look at SPY because I don't like paying for futures quotes.
And it's quiet. It's too quiet out there, Dennis. It is
the
too
calm
quiet.
Before the storm.
That's exactly what Enver said an hour ago or a half hour ago. But
one of these days we're going to get Enver on the show. I'm telling you, the background. He's in the background. He's running this whole thing, and he never comes on and says hi.
He doesn't want to come on and say hi to us. Maybe
he's never said hi.
If you want Enver to come on the show, drop it in the survey, and
we want to meet Enver.
We can make it happen. Anyway, quiet market.
Yep.
The SPY. You can look at the Qs. Down a smidgen, but if you just zoom out to yesterday's candles, you can just see overnight session, super quiet. Even the IWM too. Everything quiet across the board. Even Bitcoin. Is Bitcoin like flat?
Bitcoin's basically when you're down $240, that's flat for Bitcoin.
Yeah,
we call it stable coin now.
What?
We'll call it stable coin.
Oh, because it's stable. Is that
yeah, it's flat now. Bitcoin's even flat.
Okay.
I mean, okay, so let's go. We got basically two stories today. They are Tesla and Alibaba. Then you got a couple earnings. But I mean, the big story of the day, let's go to it. It's up $35. Elon Musk is done selling. At least that's what he says.
That's what he said. He said he actually he wasn't super. He's never super specific. I've noticed that.
Vague.
He's always pretty vague. So he was asked, "Are you done?" And I don't. His exact words were like, I think he was like, "Yeah, like I should be done."
Do we have the tweet? I think he says like, I think I sold enough or something. We're all both butchering it because we're going from our memories. I have the goldfish memory, which is like 6 seconds. So I've already forgotten what I was initially talking about here. Find the tweet. In any regard, while he finds a tweet, I'll talk to you about the trade in action. It is up $35 on the tweet. I've got to think $1,000 is major resistance for this stock. I mean, we got up $9.94 back on the 16th, rejected. 1,000 was kind of the line in the sand. That's where we bounced off it twice in November. I know you can say, cut through to 978, but we're just ballparking it. It's $1,000 stock. So I think $1,000 stock, old support becomes new resistance. I think you do find some resistance up there. It's getting the relief rally, obviously. It's been a nice 2-day rally for Tesla. Got all the way down to 886 yesterday. So you're talking about 100 points. So again, I'm not chasing here. You're coming in now. The people who are like, he's done selling by, it's going to the moon. Well, it just went to the moon. It went up $100 in a day. What do you want?
The exact quote was, he was on a podcast. It wasn't a tweet. He was on a podcast, and he said, "I've sold enough stock to get around the 10% plus the option exercise stuff." So
it sounds like he's done for now.
Yeah.
And the market is relieved of that fact because we know he's a big whale in there and he's been putting pressure on the stock with all of his sales. So they're like, that pressure is gone. The big whale is gone now. Now the stock can go back to the moon. It could. It all depends on where we're going from here. Let's take it back to the S&P for a second because it was a fantastic day for the markets yesterday. You'd think, with the being up yesterday morning, they tried to knock it back down, but they couldn't, and then they continued to buy. And it's the market that just the dip buying will just not go away. And it does appear Santa Claus wants to come to town. Huge rally. I mean, if you're buying dips, you're killing it. If you're selling rips, you're killing it. So, I mean, continue to do what works, and I think we're just fading everything. If you're fading the moves here now, I think you're looking at SPY and saying, well, 470's major resistance is going to get all the way up there. I don't know. You're kind of in the middle of nowhere here, but I do think, on dips, especially in the growthy names, which we've been talking about for the last 4 days now, the growthy names are getting bought on dips. The ARKK not making new lows 3 days ago was key. You can see a lot of the names that obviously she holding on well. I think I'm a buyer of some growth names here. Like I said, I put some IWM in the portfolio, the long term, bought 2 times. I bought IWM back, and it's the Canadian equivalent, but it holds IWM.
Okay.
I bought it back on the 16th, and I believe the 17th. I don't think I bought any right at the low there. So I think I'm averaging around like 214 where I just bought. And I put this in the long-term retirement account. The whole reason for that is I was looking and analyzing it. I was like, I'm all mega caps. And you know what? It's been the year of the mega cap. It's time to do some reallocation. Like even if you look at what's up the most this year, I know we saw a tweet go by where, you're seeing Google up like 60% this year, and Apple had a great year, and Microsoft had a great year. And I'm just looking at these stocks, and they're dominating my portfolio because they went up so much. Google still, I think, one of my biggest holdings, if not my biggest holding. I think Apple actually might top it. But I'm just thinking I need more diversification in the long-term account. And I need more exposure to some of these smaller companies because you know what? Maybe it's going to be the year of the small cap. It's been a really rough 2022 or 2021 for small caps. Maybe they come back in early 2022. And that's why I was picking on the IWM. I'm not so inclined to go and buy the Cathy names because I just don't like the valuations. But again, the IWM is going to give me some exposure to some of the smaller companies. And if it does, small caps do start to come back early in January, which I think, they might. I want some exposure there.
Yeah. Yesterday was notable because it was definitely a buy almost everything kind of day, right? Basically every sector with the exception of utilities and staples, which not coincidentally have been your two leaders here. I mean, look at the XLP, right? So the trade has now come off now for a week, but this has been your leader, and yesterday was kind of your biggest loser of the sectors.
Rotation, risk on, risk off.
Yeah, it really was that simple, and they were buying pretty much everything else: small cap, large cap. Who gives a cap, right? I mean, hey, I just made that up. They were buying it all. It was more of a sector rotation than it was a large cap or a small cap rotation.
Yeah, and those stocks in the XLP are definitely inversely correlated to the market right now. We know when the market was selling off, those stocks were getting bought. They're buying the Cokes and the Pepsis and the Procter and Gambles, and they can't stop doing it. And now, I thought it was overbought a week and a half ago. Like even Procter & Gamble, when it went to 155, I was like, it's getting overdone. When it went to 161, it really got overdone. I feel like the top is in these stocks, so I think you need to get a rally, unless we go and the market starts to crash again. But let's just, stop and look at, the overall macro picture. And it is still cloudy. Nobody knows anything. Remember, we're just all speculating. But the more and more I see about everybody getting Omicron, I mean, now you got Dan Nathan on CNBC's got it. Carl Cantonia's got it. Obviously, that came from Jim Cramer. And you look at these guys that have the variant, they have the virus right now.
They're still functioning. Right?
They're on TV.
Yeah.
And they don't even look sick.
Yeah.
I mean, that is scaring people a hell of a lot less. As you get major people, that are watched on TV that are sick and they have it right now and they're on TV and they're not sick, it makes them less scared. And I think that's why you're starting to see the reopening trade in the last 2 days really start to catch on. And that was the big driver yesterday too. Like you can go and you can say, yeah, they bought everything and they really did. But the growth, look at American Airlines. 2 days ago was 1640. Now we're talking 1840. That's just a quiet little 15% gain in 2 days. RCL breaking out, running $7, running 10% in 2 days. CCL running up from 17.5 to 20.70. And yes, they had earnings in there, which may have helped, but that's a big move. So you can clearly see that the reopening trade is starting to catch on. Now, again, I would wait for a pullback on these things now. It seems like this market always gives you another chance to get in. So maybe you get like a 50% retracement of this move. That's when you strike, maybe. And maybe I will get into some of these reopening trades. So I don't know. I just, I don't think that the market, I think it's getting less and less scared of this Omicron variant.
Yeah. And let's not forget, the Fed is still the story here. The Fed is still in play.
That's the big problem.
Right.
And that's the one that's not going away anytime soon, is that if this Fed bull, this punch bowl is being taken away, they have done nothing, and that's why I probably stay away from the really high growth stuff. Obviously, there's lots of, what do you consider, when you go into a rising interest rate environment, you start buying banks. So I think the banks are cheap here. I mean, maybe there is a trade here. You look at a Citigroup and it's been hammered. So maybe that's where you should be striking. And I do have a small position on Citigroup, full disclosure, but I'm just looking like, Bank of America, JP Morgan, Goldman Sachs, they've all been hit pretty good. So, and they're not expensive. Like Kramer's always, talking Morgan Stanley and how it's not expensive. It's true. It's not an expensive stock. So I think if you don't have any bank exposure, I think you do start to, because if we actually go into a rising interest rate environment, the banks are going to benefit from that. So
yeah, and with regards to the virus, it's very difficult right now because it does seem like it definitely not everyone's on the same page, right? During the first wave, you had almost everyone on the same page. Okay, this thing is serious, right? And the market reacted as such, but there's competing narratives here. Someone in the chat just said, just walk into a hospital and you'll change your tune. Maybe that's true, but it depends on the hospital, right? Because someone DM'd me yesterday, an interview of hospital CEO was on CNN saying they're doing okay. Their ICU is not overcrowded. So it really just depends on their situation. I'm sure some hospitals are at capacity or worse, and it's bad there. But on the other hand, you get people with Omicron on TV doing their job, and it doesn't seem as bad. So it's difficult to figure out. On the one hand, you see a headline, everyone's getting the virus. On the other hand, it's not that serious. On the other hand, wait a minute, everyone's pulling out of CES, right? CES is losing attendees left and right. JP Morgan conference is going virtual, right? And all these conferences for January are being canceled or going virtual or are losing attendees, right? Because they don't want to spread the virus around. So it's hard to wrap your head around which way it's going, and I think that's playing out in the fact that the market, insofar as it factors in these things, has not really made up its mind, right, about it.
Well, we don't know. I mean, and that's a little bit, that's why you see both stories. You see both narratives out there. And, you have Bill Gates talking, overnight and saying, we might be entering the worst part of the pandemic. And I think from a cases perspective, that's probably correct. I think we're going to make new records on cases. I think that's where it's trending to. But if the cases, and I don't know, I'm not in the hospitals, and I'm sure there's going to be some people that get sick. I don't doubt that eventually some people are going to have some bad outcomes, with this. But if the majority of people, and I'm talking, the 99.9%, are going to get this, and and 90% of them aren't going to be having any symptoms. Like, let's talk the Calgary Flames organization, and talk hockey for a second. I think it's like 17 players that have it, and I think it's up to like of staff and stuff. I think all organizations, almost 30 people that have COVID. And I'm assuming it's the Omicron variant because it's spreading so fast. But they asked, they were talking to the organization, well, how many people are sick? And he said there's 4 or 5 that have moderate symptoms, but he says the majority of them are asymptomatic. So, you're talking, when this majority is asymptomatic, now those people are all questioning, well, why are we so scared of this thing if I'm not getting sick? And I think that's what a lot of people are questioning. Why are we, taking the measures we're taking if the majority of people aren't even getting sick? I mean, Kramer was on TV yesterday and he said, this is like the easiest illness I've ever had. So, and I don't know, if he's just an exception here, but it sounds from what we keep hearing, it sounds like he's not, and the one thing it is spreading, I have my friend, one of my best friends there in Ontario, and his boy, 10-year-old boy plays hockey. Well, and this is kind of scary in itself, but four people on the team got diagnosed. So he had to quarantine for 10 days. He took the test, right away, and he's negative. Yeah. Well, he was just coming out of his quarantine. He was hit day 9. And he came out of his quarantine on day 9. He's like, okay, well, let's do one more test just to make sure because you're out of your quarantine tomorrow. And he's bloody positive. Oh. So 9 days later, it shows up positive. He's still the kid's asymptomatic. But I mean, you're talking like if it's really like hides in you for 9 days before showing up, how do you control the spread? I don't know if you can.
So my indicator as far as the market has and will continue to be this guy, Clorox, right? I use that as like my fear gauge. When Clorox starts going higher, I know people are afraid.
Yeah, it's defensive, and people are spraying everything with Clorox.
Yeah, people are buying wipes, right? I don't know. I just use that, and that may or may not be true anymore because now that we know more about how it spreads, it's not exactly going to spread from your, you're buying your groceries, your touch. Maybe it will. I don't know, but I use Clorox as my fear gauge. When Clorox goes up, I assume fear is higher about the virus, and vice versa. So, came off yesterday. So I'm not sure what that means, but I guess that means we're not as afraid as we were the day before. Let's move on here. There's a couple more movers I want to get to. We talked about Tesla. It is your leader of the morning in terms of like big movers. But we also have Alibaba, Dennis. And let me pull up let me pull up the Alibaba chart here. Alibaba is trading down 4% this morning. And it took me a second to figure out why, but we haven't heard much out of the Chinese government as it pertains to specific stocks for a little bit here. But that's what we've got here this morning now. Regulators have suspended Alibaba's cloud partnership. I guess they're saying that Alibaba failed to report vulnerable. This is what the government says. So, take that for what it's worth. But they're saying that Alibaba failed to report vulnerabilities in their open source cloud. And so Alibaba is now down 4% because of that.
I mean, this is scary actually, just because, Baba has a really good day yesterday. You're like, okay, we're breaking out. We didn't make a new all on the move. Technically, this looks good. And then, here it is, Chinese government attacking them again. Maybe it's not a big deal, but it's just the fact that they're coming in and they're doing stuff to them again. I mean, they won't leave them alone. So, and this is the fear. This is the whole reason we've sold off from 300 to 117. It's not so much that Alibaba isn't, doing well. It's more the fact that we don't know what the Chinese government's going to do to them next. So every time they come in and they do something to them, they hit the stock. With that being said, you have some fantastic support down here now. So low of the move, 108. That's quite a ways away. Low of the recent move, 113. I think you could try this dip. Again, all you can do it's been a difficult environment, obviously, like trading hasn't been just, buy every dip and it goes back up. So, it's been a different type of market right now, but I think you do find buyers in the 115, 116, 117 area for the simple reason is that some people want to get some more exposure here. And if you want to get exposure to names that potentially could turn it around from the January effect, Alibaba is one of those names. So I am not in the stock. Would I take a shot here? I might. I don't know if I will or not. Usually, if I'm going to take a shot, it's after 9:30, and then, I might take a shot leaning on that low. But if I was to do that, I would lean on the low at 113.69. So you got about $5 of risk here still. Be nice if it came in a little bit more and you have a little bit less risk. But even yesterday's low, 116.60, I mean, that's going to be a big level of support too. So you're coming into big support here. So I think if you're selling Alibaba here, I actually think you're on the wrong side of the trade.
Let's just take a moment to just like look at the Baba and the KWeb China ETF and just like what a fall from grace. Like you're now at your lowest level basically in 3 years on KWeb, right? And actually Alibaba, you're at your lowest level in what is that? That's 4 years.
Yeah. But if you go out even farther than that and go out to, like a decade, we've really gone nowhere for a decade on some of these. Not so much
Yeah.
Alibaba, and KWeb maybe doesn't have, but just take up EEM. We've talked about this before.
We have.
I mean, look at the emerging markets ETF, and obviously that's not just China. That's, it's got some others in there, but look at it for the last decade. I mean, this is incredible. You think about the bull market that we've been in, and there you are. Back in 2013, we were $50, and we're $48 here today. So you're holding it for 9 years, and it's basically, you got a little dividend off it, but it's basically gone nowhere. Very, very, very disappointing for a long, long time. And maybe it was just too many people too excited about emerging markets years ago, paying too much valuation, and the valuations are starting to play catch up. Part of me wants to, and if I was buying, anything emerging Asian, I'd probably go the emerging markets just so I don't have just direct exposure like an FXI to China, because I just don't know what they're, but there's obviously, a lot more to Asia than just China. EM gives you a little more exposure. So I have a couple of funds, I think, like ETFs that have some EM in them, but it's been difficult. It's been a difficult long-term hold investing in Asia for the last decade.
Yeah. And if you think about the type of people, the type of investors that own EEM, we're talking like big money. Like this is an asset. This is not a trade. This is an asset allocation type of thing where people will say, okay, 5-10%, whatever in EEM, and this is big money. We're talking about big money here, right? So there are a lot of investors that have gone nowhere in this portion of their portfolio for
been a long time.
And if you want to extrapolate even further, you can even say, well, you've gone nowhere in a lot of stocks too. It's mostly just the top 5 in the S&P, which there's something to be said for that too. So I would love to see a chart of the EEM compared with the S&P 495 if you just take out like the FANG stocks, and I'd be curious to see how those the long-term performance of this, because I bet you they're not that dissimilar, right? I'm sure the S&P without the FANG stocks have done better than the EM, but not by a lot. I bet, because most of the growth has come from the top. So interesting. But Alibaba, like you said, at long-term support. Are there other names, other peers you're watching this morning in relation to this? Is JD down?
No, because this is really. Oh yeah, it is actually. So I shouldn't say that. They are. Yeah, it's a rough morning for China again. Yeah. I mean, we've seen this again, multiple times, obviously, but. JD's down 2.4%. Baba's down. Pinduoduo, it's down 2.4%. So yeah, it's another rough morning for China.
Yeah. And then I saw some in the chat talking about data. We are gonna get a GDP number at the 8:30, but it's not like the most important GDP number. It's just the final revision. It's every quarter. We get the GDP from the prior quarter, and then that number is then revised two more times, right? This is the last revision of the Q3 GDP print, so it's probably not going to move markets, probably not going to change too much from what's already out there. So yes, we do have a number, but it's just going to be an update, and it's probably not going to. It's not typically a market moving event, is what I'm saying. So if you're watching for 8:30 data, there's really not a lot that's market moving, at least that's going on today. Although we do have consumer confidence at 10 o'clock, and consumer confidence has been tanking, which is interesting. But anyway, let's move away from that. I also wanted to talk. There's a few more movers on my list here. One of them being Canopy Growth. I think they called it a stray from Bank of America this morning. They called it a downgrade, if memory serves. Let me pull up my sheet here. Yeah, B of A.
An ugly note.
Bank of America downgrade to underperform. $10 price. Well, we're already below that now, so okay. But underperform from B of A on Canopy Growth, and it's down 3.73% right now. So downtrend continues. It is so hard to get excited about the Canopies and the Chronoses.
All these stocks valuation has come to roost, and we've talked about this on this show. It's why I didn't own any pot stocks the whole time. I didn't make the money on the way up, but I'm definitely not losing it on the way down. And valuation never made sense on any of these names. It gave you a fantastic shot to get out of CGC again at the beginning of 2021 when everything blasted off. I cannot believe this got back up to $56 a share. Gifts of all gifts. Didn't make a new high on the move. I guess that was the tell. But yeah, the big pot bubble from 2017 to 2019 where it was going to change the whole world. And the valuations never made sense, and competition has come Now, there's a bazillion companies doing it, and you're looking at the valuations and saying, okay, well, a lot of these companies still aren't even making money, and if they are, it doesn't justify ridiculously high valuations. So, I mean, you're at $9. Is it going back to 50 or 60? I don't think so. I don't think it's ever going back there, but I guess you can never say never. I think probably the path of least resistance for a lot of these stocks is still lower. But again, January effects coming. These are beaten down names that are getting, hit with tax loss selling. So I do believe that Bank of America is late to the party here. I think you could see a relief pop in January. I'd be seller of those pops, though, in the pod stocks. But I think you could see a January effect where a lot of these beaten down names, including some of these pod stocks, actually rally for the first week or two of January.
Yeah, Third Wave said, CGC is a long hold. And that's how you have to approach this. If you're in it for more than a trade, you gotta kind of just stick it in a drawer.
I think that's exactly wrong. Because I think if you're going to go on these names and they say, oh, it's a long-term hold because you're way down in it, you got to use valuation to get there. I mean, what is CGC worth? What is the market cap? What is the PE on CGC? I don't think they make money, so you probably can't even get a PE off it. Do they make money?
Price of sales of 8. Is that 8 or 3? That's an 8. That's high.
Yeah, it's still high.
Yeah.
I mean, and punfully, not really intended. $3.4 billion. I mean, it's worth 3.4 billion. There's a bazillion companies doing the same thing now. So you can say, well, it was worth 30 billion before, which never should have been worth that, or 20 billion before. It never should have been there. So frankly, it didn't make any sense.
Wait, what's the saying about settlers and pioneers? Right, pioneers are the ones that the first through the door are the ones that take all the heat, and then the settlers come in after and just rest on their laurels. Because Canopy was a pioneer; they were one of the first. There were very few ways you could get exposure to cannabis in individual stock.
Oh yeah,
and Canopy was one of the first. And
Kramer was on Best of Breed. How many times is he saying this is Best of Breed? This is the one you have to own. And he's on yesterday, and they talked a couple days ago. He's like, well, you can't own these things.
And they're paying for it. They're paying for the fact that for a while they were the only game in town. There was like 3 games in town, and Canopy was one, Kronos was the other. You had Aurora, you had a Freya, and Scotch Miracle.
There was in Canada at one time there were 27 pot licenses, or marijuana growing licenses that were given out. 27.
Yeah.
I don't know Canada how many. I'm trying to Google it. Marijuana licenses, but I'm talking even in Leamington where Canopy, where Afria is.
Yeah.
There's 3, 4, 5 other grow ops doing the same thing down there now. I mean, in just that little area. I mean, there's hundreds, if not potentially thousands of companies coming in and doing the same stuff now. So we said, once, competition starts to intensify, it's going to be the time to get the hell out of all these names. And competition has come from the US, from everywhere. And now you're looking at the valuations, and there's just not enough. The pie, which is getting bigger, is not big enough still to justify all those valuations. And that's why you've seen this huge multiple contraction coming in, where you're 8 times sales, are you going to go down to 7 times sales, 6 times sales? You could reasonably see where, and again, this is the worst time to talk bearish about the pod stocks, because I've been talking bearish the whole time, and we're going to have a January effect. I think some of these stocks are actually going to get a lift in January, but there's so many better names that that have been beaten down to get into, other than trying to be a hero and call the bottom and pot.
And the other side is you could say, okay, well then go ahead and short it, and it's like, well, why would
You're way late to the party on that?
Short it now? It's
way late to the party. I mean, the things went from 60 to 9. What do you? So at a certain point in time, it's 3,
how
4,
much
5
more meat on the bone is there?
$6.
How much more meat on the bone is there to short? You have to ask yourself that question.
$7 on Tilray. What was the high on Tilray again? Well, 300.
300, Dennis, but that doesn't count.
Oh, okay. Because of the merger?
300, because it went from one. I'll never forget that day. Tilray went from 150 to 300 to 150 in the same day. And I thought that was the peak of stupidity, and little did I know.
Just incredible how, and that's why at a certain point in time, even if you're saying I'm going to hold this forever, when it just gets to nosebleed territory and you're sitting there and, you don't understand how much money you just made, sell some, just, lighten up, because this is turned now and it's ugly, and there will be bounces. and I think those bounces are to be sold. But I do believe a lot of these beaten down names. So if you want to take a flyer on Tilray, if you want to take a flyer on CGC, I don't think you're in bad shape here. I would stop myself out on the lows, 852. And then you're playing for the January effect. You're playing for that 1 or 2 weeks in early January where a lot of these names, the tax loss selling will stop. Don't kid you. There has been massive tax loss selling knocking CGC down, massive tax loss selling knocking Tilray down. That should, cool off obviously in the next few days, and you should start to actually see a relief pop in some of these names, I would think, in early January. So there is a play here to get long some of these stocks in the next few days for that anticipated January.
And actually, that same logic could also apply to theoretically anything. It could apply to ARKK.
It totally applies to ARKK.
It could apply to Zoom, Peloton.
Yes,
it could apply to anything.
Yep, all of them. I think all of those could get a pop in January. So actually, as a trade, and I don't have any of these on yet, but you start thinking the next few days, maybe you want to position yourself in some of these laggards for that anticipated pop in 2022. And remember, and different countries work in different rules, and Canada works on settlement date. So actually, December 29th.
Good tip.
December 29th, like US works on trade date, Canada works on settlement date. So January 29th is actually the last day to realize those losses. So come December 30th, like me as a Canadian can come and start buying these things, and on December 30th, and you start thinking that maybe that's, going to start lifting as well. So just remember, that different countries work on different rules.
So in other words, if you're in the US, and you're selling losers to offset any gains that you have, you have until the last trading day of the year.
Yeah.
In Canada, you have until the last settlement day of the year.
Which is 2 days before.
Which is 2 days. Well, no, it's right because
2 day settlement. 29th is the last day.
It's T+2, so they do it as like the deadline is. Because it's T+2, you have to go from the end of the year minus 2 days, so it settles by the end of the year. So it's the 29th. So you have an extra 2 days if you're in the U.S. to sell any losers to offset gains. It's a good little tidbit there. We should mention that every year. So good thing.
Yeah. So you Canadians, the 29th, you don't have till the 31st. You start selling stuff on the 31st, and it's going to roll into the next year. So you're gonna be like, oh man, I missed it. 29th Canadian. Yep. I'm Canadian. For my longer term stuff, my longer term account, and obviously that's outside. Obviously, if you're inside a registered account, doesn't matter. But it's the 29th is the last day to realize those losses.
All right, so it's an interesting trade, and we can talk about this with our guests as well. It's an interesting trade of trying to set up longs on all these laggards. Pick your poison,
I think
right?
So.
And you would probably want to do it in any name that you could find some sort of it's not an all-time low, right? So not like Robinhood works here. Robinhood's not an all-time low, so that works. But you could probably do it for a lot of them, frankly.
I think the bottom is in on a lot of these names. It's not the bottom, but I think the short-term bottom is in a lot of these names. I already set it up on Hood, when we're at 1820. We haven't gone too far from there yet, but I was like 1707 to stop out there. I haven't put a lot of these trades on yet. I'm scalping, I'm doing all sorts of other things, but I don't think I have any swing longs on right now, but I probably am going to start positioning myself in the next couple days on pullbacks. So if I get some pullbacks on some of these beaten down growthy type names, I'm going to start positioning myself for swing trades to try to take advantage of that potential January effect. I mean, nothing works forever. It's not absolute that they have to go up early January. It's just, it's seasonality. So you more often than not, they start to see a relief pop, these beaten down names in early January. So you're just playing the odds. And the odds are in your favor to actually be long some of these growth beaten down names for early January.
For trades. And
for trades.
Decline was asking about Upstart. Yeah, that's what we mean. We mean any of these stock. Well, Upstart is kind of actually, I don't know if I'd say Upstart because how many people are selling Upstart for tax loss this year? I don't know.
So I bet you there's some. So I think Upstart's a good candidate. There's some people that bought this thing at $400 or $300, and they're like, "Wow, I need, I've had a good year." I look at right now, and I will tell you, I had a really good year this year, and I will look at the 27th, 28th, and 29th and sell everything that I potentially can that I'm down in just to try to minimize that tax bill.
Sure.
So it won't even matter, unless I was really convicted on the name. I'm probably going to sell. And and I've already been doing a lot of it. I've already lightened up a lot of those names, but you just look here. Like I have one, that had APT, which was the mask maker, and I'm going to sell all that.
What happened?
Yeah, I know, and that just got absolutely crushed. I
if
had
you don't
that.
go through your portfolio and sell your losers for tax law, I mean,
yeah, I'm getting rid of all that. So that's going to be sold in the next 2-3 days.
It's very cathartic. Like, you're gone, you suck, you're gone, you're gone, you're gone.
And then you're clean. You've got a clean slate to start, so it feels good.
It feels great.
Yeah, it's cleaned right up. So you got to clean it's like what do they call it? Deadheading, your garden or whatever when you're popping off. That's what you got to do to your portfolio.
I don't know.
And you do it at the end of the year. You get rid of all this garbage that you're wrong on, because you know what? We all make mistakes. We're all going to be wrong. If I was 100% right all the time, I'd be the richest man in the world. And it wouldn't even matter. I wouldn't even have to trade. So we're all right. We're all wrong. So you got to take your losers. And if you haven't been taking them along the way and you're sitting with some pretty doozy ones, you take them at the end of the year, you save yourself a little bit on your tax bill, and you start fresh. That's how I do it.
All right. For those who care, the revision for GDP came in actually higher than the prior number, but by a smidge, 2.3% versus 2.1%, but not really moving the market here. Let's bring on Chris Temple, editor of the National Investor. I wonder if Chris gardens. Let's ask him. Chris, do you know your gardening terminology or not really?
I'm great when it comes to growing food, guys, but lousy when it comes to flowers. I couldn't tell you the difference between a dandelion and a rose.
What kind of food do you grow?
Most every kind of vegetable you can imagine. No set thing. I mean, I don't do it as much in Florida as I used to do up north, believe it or not, even though we've got a much longer growing season down here. But most of my gardening these days has been when I go up north in the spring to visit my children and grandchildren. For the summer, I help my oldest daughter put her garden in, and that's fun.
All right, Chris, let's talk about let's get your overall market thoughts here. So far today, we've talked about the impact that the Fed is or isn't having. We've talked about what the market thinks or doesn't think about Omicron. I'd be curious, like, heading into next year, what you think is sort of like the biggest theme right now.
I think the biggest theme is we're all going to be looking to the Federal Reserve to see if they are really serious with what they've started to broadcast recently. We've had a Fed chairman who, when he started this job almost 4 years ago, correctly pointed out that the last two major busts that we had for both the economy and the markets were the Fed's fault for blowing too many bubbles, letting liquidity, and his favorite word, euphemism for this, imbalances, get out of hand. And then the markets went down because they were too lofty and took the economy with them for a while, and the Fed had to clean up that mess. He has done things in the last 2 years, with the pandemic as an excuse or not, that would make Alan Greenspan blush or Ben Bernanke blush. We have seen all of these bubbles blown again, to the point where now you have everybody saying that the Fed has overdone things, not only some of the smarter people in the markets, but where this has really come home, I think, and I'd have loved to have been a fly on the wall, guys, at the White House when the president was talking with Powell and with the new vice chair nominee, Leo Brainerd, to say, hey, we're going to get annihilated at the polls next year. These guys think that I'm the reincarnation of Jimmy Carter. Inflation is the worst in 40 years. Do something. And again, this is not a surprise to any of us, but where it's really starting to hurt politically is where people are understanding that the Fed is responsible for all of these soaring prices. It's not supply chain disruptions. It's not Omicron or Delta, or whatever other letters they're going to come up with for the next variants they've got on the shelf. It's the Fed's fault, because inflation, as the late Milton Friedman always said, is first and foremost a monetary phenomenon. They printed way too much money in the name of saving us from this. Now they're trying to figure out how to dial it back. Powell deep down knows he overdid it. He knows he made a mistake. He knows he's way behind the curve. But China's already in recession. In Germany, the IFO business index has dropped for 5 months in a row. They're probably already in recession, though they haven't come out with the numbers yet. The only reason that the Bank of England just surprised markets and raised interest rates a little is because for the first time since George Soros pressed the pound 30 years ago, currency traders were rebelling against it. It has nothing to do with the economic strength or lack thereof in England. So you've got a Fed that wants us to believe that they're going to be an outlier. And as the de facto central bank, really the whole world, because we're on a global dollar standard, they're going to tighten policy. It's going to cause a lot more volatility in the markets. It's going to cause a lot more angst. My prediction is we'll be here a year from now, and the Fed will not have followed through on what they said they were going to do, despite inflation still being high.
I think you're right. I think that too, is that they'll back off, especially if the markets start to sell off, because it's they say they're data dependent. We're not looking at the markets, but we know this Fed has always defended the market better than any other Fed, I feel like, in history. I mean, we look, and if the markets start to sell off significantly, they'll start to cool their taper talk. They'll start to cool. Oh, maybe we're not going to do 3 interest rate hikes. Maybe we're only going to do 1. Because if the markets stay strong, they'll hold it up. But if the markets start to go weak, they're going to do something. So it's almost like if you're along the markets, it's hard to lose.
Well, and that's what the Fed has been playing all along. Look, I've said a million times, you don't have time for it on this show, that the forgotten legacy of Paul Volcker was not in his first 3 years or so as Fed chairman, raising interest rates, stamping out the inflation and whatnot that we had back then. He, after that, starting in about early 1982, guys, inaugurated the current mantra of the Fed that it has operated under for 40 years. And that is to inflate asset prices as a first matter, to enable more debt, and to hopefully trickle down to Main Street and generate more growth. Problem is, as time goes on, they get less and less real organic growth in the economy for all the debt that's created, but they don't know anything else to do. And look, Powell told us last week, I think it was an answer to Steve Leisman's question from CNBC, when he said, well, look, you're still expanding the money supply. One of the biggest jokes, in my opinion, about the Fed helping the little guy with keeping interest rates at 0 and blowing all these bubbles, he's priced millions more people out of being able to afford a stinking home. That's not helping the little guy. And he's going to hear a lot about that when his reconfirmation hearing comes late in January. That's going to be an entertaining thing. You got to make sure you have a good supply of beer and popcorn for that one when we get to watch that hearing. But look, Powell admitted in answer to that question that the reason he's not acting a lot faster is exactly that, Dennis, because he doesn't want to roil the markets. So that was the one implicit guarantee that we got out of the Fed last week. The other being that we may never, I'm older than you guys, I may never live to see positive real interest rates again in my life because inflation is going to stay a lot higher when it flattens out than people expect, but the Fed will be powerless to really catch up to it.
So what I wonder what you think the implications of this on like U.S. equities would be.
Well, still, Spencer, you've got a lot of liquidity out there. I don't buy, although this is always possible because of the nature of our leverage on top of leverage on top of leverage today that we have. But look, I think that my base case for next year is that we see the headline stock indices down 10 or 12 or 14%, nothing drastic necessarily, but there's going to be a lot of churning. Barron's Forsyth's column starting out this week's Barron's had a statistic that I didn't even realize. The average U.S. stock this year is down 28% when you look at every single publicly traded company. So within the market, and this speaks to what you guys were saying before you brought me on, there's going to be a lot of bottom fishing opportunities, both for trades and both for good long-term investments, because there's been a lot more damage within the stock market than people realize looking at the headline indices. That said, I think that's going to continue into next year, but I believe at least part of it's going to be healthy. You're going to have a growing stagflation environment where just closing your eyes and throwing money at whatever is popular, the meme stocks or whatever, isn't going to work like it's done in the last year or so. So you're going to have an opportunity to buy value, to buy stuff that's cheap, that still has earnings. Most importantly, guys, stuff that has pricing power, because we have not yet seen a recognition among analysts or the broad market, either one, that corporate profit margins are going to get annihilated in the next year because of these rising costs, much more than we've seen.
All right. Well, Chris, you just casually said that, yeah, I think the major indexes are going to fall 10% next year. No big deal. And I understand that's normal on a historical standpoint, but that would also make next year the worst year since 2008. So, because you can understand why people would not see that as just a casual 10% decline for the S&P for the year. It ain't no big deal. But to a lot of people, it is a big deal.
Well, you think it is a big deal, Spencer, is what you're saying?
Well, to a lot of people, we haven't had a year like that in 13 years.
Well, and here again, this is part of the problem today when we have this environment where everything comes too easy and too cheap, including money, because of the price suppression by the Fed on interest rates. I've been doing this for over 40 years. I remember when 10% corrections were nothing. I remember when the Fed, when it wanted to change interest rate policy, Paul Volcker put out a press release while we slept saying, hey, as of today, the federal funds and discount rates are both up 75 basis points. If you don't like it, too bad. Have a nice day. They didn't have a press conference. They didn't have a bunch of wordsmiths like they do with the Fed these days, trying to figure out how to massage the words transitory and imbalances and all this other nonsense that we get tortured with every time we hear these people. So, investors today are spoiled. There's a lot of people have no idea what a typical market or interest rate cycle is, either one, because the Fed took them away. We have no price discovery. You've heard a lot of people say that. We're going to get some of it back, I believe, in this coming year. And part of that, I do believe, will be that we will have a down year for the broad market. Again, not disastrous, because as we said, the Fed will, if it's not the president that needs to pens, it's going to be Powell if all of a sudden the market took a big drop.
There is nothing wrong with the market going down 10%. Even like I said, would be normal for historical standards, right? There's nothing wrong with that, but for a lot of people, they've never seen it before. Right.
Well, but maybe to Chris's point is we did see obviously a significant sell. You're saying the average stock was down 27% this year. I mean, we keep looking at the broad indices and the SPY and say we don't see a sell-off.
That's fair.
But you got, it's been held up by 5-6 names. We know that. Right. Apple, Amazon, Microsoft. So I think what you're saying, Chris, is maybe those names, maybe it's time for them to cool off as well.
Well, it could be. And thank you for bringing that up, Dennis, because I'll clarify what I said. If the NASDAQ, which would probably be down more like 20% next year, and the S&P were down 10% next year, those value stocks that are down 28% this year might actually be up. Don't forget that there was a period back in 2000 to 2002 when you had the huge decline you did in the S&P 500, where if you early on in that process got into interest rate sensitive stuff and energy and commodities, you were making money as the S&P kept declining. And I do think we're going to see much that same thing in the coming year.
All right. That's totally fair. Chris, let's get to some specific names that are on your radar for next week. You dropped a couple in the note to me. I want to ask you about Fluor, FLR. I want to bring it up on the screen. Tell us why you like this name.
I'll tell you what, I've been pounding the table on that for a while, since it was down in the teens. Now it's been up around 24, 25 bucks a share. Two reasons, Spencer. Number one is that they own 60% of a company called NuScale Power, which has the state-of-the-art technology in small modular reactors. The new renaissance for nuclear energy is at hand. It's the only part of the green economy of the future that the Biden administration has not screwed up yet. And I don't believe they will. They're on board with this. So look, in 2011, guys, Fluor paid the grand total of $30 million for its majority stake in NuScale. It was announced a week ago that NuScale is going public via SPAC merger with a company that's already on NASDAQ. The stake that Fluor has afterwards will be worth about $1.3 billion for their $30 million investment 10 years ago. Not a bad return. And if that's not enough, Fluor is a miniature conglomerate. They're one of the best engineering companies in the world in all manner of things. Their book of business has exploded. The stock is still being punished by a lot of analysts because they had a few quarters a while back where they underperformed. They've already started turning that around. They've got a major job with LNG Canada, the biggest construction project in Canada's energy history. So this is something where, as much as I am dicey about the overall history or future rather ahead of us for a lot of different reasons, if there's a stock that conservative investors that believe that we need to have a change in our energy mix, there's going to be infrastructure spending, particularly on nuclear energy. This is a Cadillac of a company. You can buy it and put away and forget about it. I don't say that about very many companies, but I'll say it about this one, guys.
All right. Maybe one more where you're not at, where there isn't as much of a strong of a fundamental case. What about Sarepta here?
You know, Sarepta is my all-time winner. I knew this company well over 20 years ago, and it was a little company called AVI Biopharma out in the Pacific Northwest. They changed the name, and I think it was 2012, a few months later, after I told people to get back into it at under $2 a share. They had their first breakthrough where one of their drugs, which is now being sold to Duchenne muscular dystrophy patients, actually showed that it can fool the body of a muscular dystrophy sufferer into producing dystrophin. They were the first RNA company that actually was able to commercialize their science. We got back in under $2. It ran up to 170. We traded in and out of it. I just told people to get back in around 70. There's a bit of M&A going on now. Companies like Pfizer are swimming in money thanks to the whole pandemic business that they've had that has caused their cash to do their burgeoning with money. And I don't think it's going to be too terribly much longer before Sarepta gets bought out. It'll probably be about double to triple where it is right now.
All right, so this one more of a potential M&A play in your mind than anything else.
It is, but look, they've not needed any partner to commercialize now 2 different drugs. They've got phase 3 trials that are due this coming year on a couple of their gene therapies. One of them they had a hiccup on early this year, which was the reason why the stock got cut in half several months back. But I think they're going to bounce back from that. It is really the elite company and the kind of science that they're working on. Notably, they rallied, and I didn't look into this as much as I'd like to yet, guys, but Pfizer, which also has a gene therapy drug, just kind of fell on its face. So I like Sarepta's chances to bounce back from that. And while we're at it on that, I didn't send this to you, Spencer, but I need to mention a huge winner of mine in the last year, Anavex Life Sciences, AVXL. They will be benefiting perhaps this year from Biogen's dog of an Alzheimer's drug that the FDA approved several months back. And there's been nothing but trouble with that. This is I think is about, between this and Frontier Lithium, of my big winners of the last year.
All right, Chris Temple is editor of the National Investor. Chris, Merry Christmas, Happy New Year, Happy Holidays. We will talk to you again in the new year.
Look forward to it. Take care,
fellas. Have a good one.
Thanks, Chris.
All right, it is 8:53. It is time for ticker time. So drop your tickers in the chat. We will take a look. Here's one, Dennis. I know you never trade it, but I'd be curious to get your thoughts on it. And that is, it was asked earlier, Nintendo, which trades OTC in the U.S. So I know it's not on your radar, but I'll bring up the chart here. And I think they were looking to see if this is a good time to buy Nintendo. Your take.
I mean, some of the gaming stocks have really been beat up, so let's just group them all together. The only one that I own still is Take-Two. I own Zynga too. I own Zynga and Take-Two. I've thought about getting back into like an ATVI, but they've had so many issues.
Oh wait, but on that note though, did you notice the last couple of days? Well, I'll get back to Nintendo. I won't forget. But
sure.
Did you notice the last couple of days in these names here? Let's look at Take-Two and EA and all that. Look at the last few days.
They've been coming back.
Yeah. Look at the last few days.
Yeah, they've been coming back. The video gamers have been beaten up, and they've been really beat up. Zynga has been, and obviously Michael Pachter pick. I think he brought to us around $9 or $10, and it's been a bad one. But Michael Pachter has given us a lot of good ones too. So I'm never gonna, and obviously Michael Pachter, long-term time horizon, he still loved Zynga. I'm sticking with it just because of him. Like I said, I've been selling a lot of losers out of my portfolios. It's not one that I'm intending to sell. Although it's not a huge loser for me because I had bought it and then I sold it. And then I rebought it around 750, so I'm down about $1, and it has been great. The Nintendo's starting to show some life. I mean, the PE is reasonable; it's like 14. Dividend there is 1.6%. So on pullbacks, is games going away? I don't think so. Did they kind of benefit from this whole move to the metaverse? I think they do. So I think you still do want some video game exposure. So not that I'm buying NTDOY because I stick more to the North American companies. But it looks okay. I think you want to be long video games on pullbacks.
All right. A lot of tickers flying now. Let's try to look for ones that we don't hit on too often. Or whose charts don't look identical. What about Corsair is kind of the same trade there. So
I mean, Corsair has been beat up. This is actually one that could have the January effect, though. So I think the short-term bottom is in for Corsair. I actually would be a buyer of this on pullbacks. Again, we're always buying dips, not buying rips. Leaning on the 20. So, right. And that would just be a trade. That wouldn't be a long-term investment. I don't have a position on it, so I can freely talk about it. But I think the 20 is a nice psychological level here. It's been beat up, had a really rough year. It's one that could potentially benefit from the January effect. And what I call the January effect is the buying of the beaten down names. Some other people call January effect other things, but that's what I call.
What about Crocs? I see you, Diego. What about Crocs? It had a huge run, and now it's come off.
I've never understood this, though.
No one understands this.
No,
That's
I know.
The point.
And maybe, it's the fact that we all were staying at home and this was a kind of a stay-at-home play too. But I don't know what it is, but it's just the stock. It seems like every time Crocs pulls back, it's a buying opportunity, so it's hard to argue with it. $130, pretty good support there too. Could this benefit from tax loss on? There's so many people that are way up in this one. This isn't one of those names. Yeah, we've had a sell-off in the last month, but I think even on the year, I think Crocs is still up substantially. It is. It started the year around 70, and now you're looking at 138. So there isn't a lot of tax loss selling in this. I think if I'm looking at names that could benefit from what I'm talking about is that January effect, the buying of the beaten down names. I think I'm looking at, those other names that have been straight down, those growthy names, those Kathy names, not so much Crocs.
I just had one. Dropbox may fall into that category, right, Dennis? Yeah, for sure. Beaten down. Maybe a short-term bottom in DBS.
I can't talk Dropbox. I have a position on it.
Oh, look at that!
I'm not gonna say if it's long. I'm not going to talk it.
Whoever drops Dropbox in the chat, Cole, Taylor, you and Dennis are on the same page here today, or maybe you're on opposite.
No, I'm not going to say which side I'm on. I just have a position on it. So when I have the short-term trades on, I don't want to even talk about them.
That's fair. Okay, Ramon, we can look at Citigroup for you. How's Citigroup doing here this morning?
Can't talk that one either.
Hey, wow.
But I did. Long term. On Citigroup, like I said already, has been beaten up. So I think some of the banks, I think I would want to own the banks into 2022. I think if we're growing in a rising interest rate environment, I want to be long some banks, and they've been killed. All
right. CarMax was dropping the chat.
Earnings.
They had earnings this morning, and looks like they were good. Their earnings beat sales.
They're always good, aren't they? Isn't CarMax always beat?
Let's find out.
I feel like they always beat.
Go to the calendar and Pro. We'll go, all time, or at least we'll go to the last few years, whatever. Let's just take a look at. No, they don't always beat. They usually beat. They don't always beat. Anyway, back to the chart. What do we got here in CarMax? Well, we're higher this morning off that report. I think the call is at 9, so it hasn't happened yet. I don't know. I mean, oh wow, that's a good year for CarMax. I didn't realize that.
CarMax is just one of those sneaky stocks that you don't look at that often, but it always seems to be going up. It's a fantastic company that just seems to figure it out.
All right. I saw the Sea Change news, Matt.
What is it? The news on that? This is a cold pick.
I know.
And he's talking about it on his Twitter, SEAC.
I know. So some good ones. So it's halted this morning because they officially confirmed the merger with Triller. I'm going to get Matt Kolb, who pitched this one like a week or so ago on our channel. I'll get him on tomorrow if I can. Actually, I don't know if I'll be able to because I think he's out of town.
He's a fundamental long-term investor, and he digs through and looks at all the information. And Kolb obviously worked for Benzinga for a long time. We all love Kolb, and he brought us INSG. He brings us some really good names sometimes.
Yep. All right. It is 8:59. Now it's 9 o'clock. Look at that. So time flies when you're having fun. that'll be a wrap for this show today. I have some programming notes and announcements to get to, but Dennis, I will let you hop, and I will catch you tomorrow for
one more day this week
for our last show of the week.
Yeah.
Even you get off.
I get Friday off. Wow, I get a day off.
Yes.
It's amazing.
But I'll catch you right here tomorrow. All right. Some programming announcements for today. We are going to go from here to live trading with Benzinga like we always do from 9 till 9:05 till around 10:30 or so. But after 10:30 is where the day gets a little weird. We are not doing Benzinga live today because, frankly, everybody's out. is the honest truth. Everyone is out. I have to step out. I'm going to Joel's mother's funeral today, so not doing the show today. No at the close today as well. But I think we are doing the roadmap, our NFT show. That'll be at 2:00, and that'll be our only show today in the afternoon. So kind of a weird day. Tomorrow will be more normal. I'll be back tomorrow. But kind of a weird day on the programming note. I was told explicitly to tell all of you, since you are already fans of Benzinga, like us on social media. Follow us on the Insta, the TikTok. Are we still on Vine? Follow us on Vine, Facebook. Like us, subscribe, follow, do all that good stuff on social media. I was told to do that by our social media team. So I made the announcement. Follow us on social media, Instagram, Vine, MySpace, TikTok, all of it. We're everywhere. Thanks to our guest today, Chris. He's laughing in the background, but yeah, I know we're on MySpace. I was on the MySpace yesterday. Hit the like button, like and subscribe. Thanks to our guest, Chris Temple. Thanks to all of you in our chat as always. Hey, I want to end the show today with a trailer for our last boot camp of the year. It's actually 1 week from today. It's going to be all day next Wednesday from 9 to 5, basically, right after this show ends, a week from today. We're going to have a full day of trading education. What's going to happen? Who's going to be there? You're about to find out.